Hi, my name's Amir Ghandar, Reporting and Assurance Leader here at Chartered Accountants Australia New Zealand. I'm joined today by Doug Niven, Senior Executive Leader, Financial Reporting and Auditing at ASIC, and we're going to talk a little bit about some of the focuses for ASIC coming up in 2019. So Doug, you've just released your Audit Inspection Program report and your Financial Reporting Surveillance not long ago. Looking at chief financial officers, directors, also auditors, so everyone involved in financial reporting, what are your key messages on where they should be focused during 2019?
While there's some differences in the areas that we highlight for auditors as opposed to preparers of financial reports, there are some real commonalities as well. It's the case that in our findings from both programs, the financial reporting surveillance and the audit inspections, we continue to have common findings around particularly impairment of non-financial assets, goodwill and other intangibles and so forth, but also around revenue recognition. And so those continue to be focuses in both programs on an ongoing basis. A number of issues in each area. In impairment, a lot of it is around the key assumptions that are being made and the reasonableness of cash flows and how both directors are challenging those and of course the auditors. In revenue recognition, we have some real issues about whether it's goods or services, whether delivery control has passed, services have been provided, and whether revenue is being recognised at an appropriate point in time. But also I should add, and I won't go through the whole long list of focuses for financial reporting and for auditors, but of course this coming reporting period we have some major new accounting standards, and the first ones off the list are actually around contracts and revenue recognition and also around financial instrument valuation. There's one coming a year down the track on leases. We've got insurance, which is for insurance companies, but also a new conceptual framework with definitions of assets, liabilities and so forth. And those new standards are quite important because they can lead to significant changes in reporting for entities. And so it's important that everyone applies their minds to those, the disclosure requirements as well. On the revenue side, there's quite a number of new tests. It's a much more detailed standard, and that's causing people to go back and look at contracts and rethink the accounting. But on the financial instrument side, of course, we're going from an incurred loss model to an expected loss model. That can be significant, along with changes around hedge accounting and so forth. So those are really important areas to look at. The ones that we've had concerns about in the past, where we've had findings and there have been significant changes to financial reports, but also looking forward, the impact of these major new standards and what they mean for system processes, but particularly also for the information in the market.